faculty Ravi bhai, office bearer, CA Rakesh Shah, treasurer, and CA Rajesh Agrawal ji, Vikasa chairman, members of the profession, and all the participants. On behalf of WARC, it gives immense pleasure to welcome you all to today's knowledge session on the important topic of TDS as per the new Income Tax Act. I request office to play ICI motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
For CAs, this means remaining vigilant, informed, and continuously updated in this dynamic regulatory environment. In the ever-evolving world of taxation and law, professional excellence comes only through constant learning and impactful leadership of our chairman, C.S. Saurabh Ajmera ji, under his leadership of this 75th year of legacy of WRC, and he is our impactful chairman, 75th chairman of WRC. Now I request our chairman, sir, to give words of wisdom to all the participants. Thank you very much.
Thank
Chairman,
you,
sir, over to you.
Thank you, Vishan Bhai, the dynamic secretary of WRC, treasurer CA Rakesh Shah ji, Vikasa chairperson and who is representing more than 4 lakh chartered accountant students, CA Rajesh Agrawal ji, and the speaker of this wonderful session, CA Ravi Soni ji. So friends, I welcome you all in this another exciting program of WRC, where we are going to discuss about the TDS provisions under new tax regime. And friends, this year WRC is committed to empower all the stakeholders through our vision, which is through the important action we are trying to have impact on each and every stakeholders. And friends, believe me, we are having so many programs for the members as well as student where they can have a complete different experience and they can be a more impactful year from the WRC, and where I stand for innovation. When we are saying we want to create an impact, it starts with the I only, because everything is starting from I. So impact is also starting with the I, where innovation is the core, which we have to understand in our life, that we have to be very, very innovative. We have to inculcate new things, be it AI, technology. We are doing our best to empower through our resources. Our members need to inculcate as early as possible, and they should feel innovative through new ideas. That is our object. And then mindset, M stand for mindset, which is very, very important. Whenever we are going for any new thought, first the mindset should be positive. Mindset should be according to the need of the global standards. That is our object, and we are doing a lot of things to create such type of mindset, because we all know that 2 years before we were not that keen to have AI use, but now I believe that everyone is using AI tools for their day-to-day working. So this is the mindset shift which we want for all the areas, and that will lead to compliance to value creation. So we are doing a lot of program where our members can understand the value creation part rather than following the compliance only. Then professional excellence where P is the professional excellence, and I believe that we are the part of ICI where it is expected to have a highest professional standard in our day-to-day working, and for which we are doing a lot of programs to empower all our members for the achievement of the highest professional standards in the fraternity. A stand for adaptability. Friends, this is again a very important thing. Whatever we are doing, if we are not adaptable, we are not taking lead for the change which is inevitable, then nothing will make sense. So we have to be adaptable also for all the stuff which we are trying for our members. So suppose very soon we are programming a event on carbon credit. This is again a very intuitive program, but are we ready for these things? Then only we can create career over there. So my request would be that whatever the new theme is there, we should participate, we should be adaptable, and believe me friends, nothing can be achieved without going out of comfort zone. So we have to go out of comfort zone, and we have to adapt all the new thought process. Then collaboration again, which is very important and need of the hour, because we are in the era where networking is playing a vital role, and we have to network amongst our professional brother as well as the all the stakeholder, be it corporates, be it industrialists. We have to connect with them. So WRC is trying to have one more project over there, that is WRC Corporate Connect, which we are launching soon, where we want to connect all our chartered accountant, those are working in the industry, those are working as an entrepreneurship. Definitely we will launch this project very soon. And then T stand for transformation. Friends, we have to transform ourselves with the goal of our country, that is Bharat. So Bharat is going very fast in terms of economic size, and we have to transform ourselves also according to that. We have to participate in the journey of 50 trillion economy in 2047 as targeted by our government. So first we should understand our role. Being the financial soldier, we have to understand, it is very clear that this journey can't be possible without us. So we have to take participation, and then only we can lead for our future careers. So this is the impact and important action which we are trying to have over there. Very soon we are launching one of the program, that is Sustainable Sunday, in which we are going to discuss about the three P's in a different way. First, we have to thought about the planet, then public will make sense, and then profit can be a part of this success. So that type of initiatives we are taking. Again, we are launching one series where market on Monday is the tagline. We all know that the size of capital market is growing very fast, so there are various opportunities which can be taken by our professional brothers. So definitely we'll have that soon also. And my request to again each and everyone, please take participation in all the activities of WRC. We have lined up so many programs that is available on our website. On 12th, we are doing members meet, which is very important for all of us. That our leadership is there, president and vice president will be there to interact with the members at Yogi Sabhagrah on 12th by 4 p.m. And we are having one important capital market discussion with Anil Singhvi, moderated by Kushal Loda. So requesting all of you to participate in members meet at length. With this, now I like to hand over to Secretary Bishan Shah again.
Sir, thank you very much. And as Alvin Toffler rightly said, the illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn, and relearn. That is what you also suggested. And for that reason only, this type of program are arranged under your leadership. So, sir, thank you very much for your motivating words. And as Amrit Kal is going on, I am sure that member will be benefited in this 75th year of WRC. Now, I request our treasurer of the WRC, CA Rakesh Shahji, to introduce our learned faculty, CA Ravi Soni ji. Thank you.
Thank you, Bisun Bhai. And as described by you as well as our honorable chairman, Mr. Saurabh Ajmera, we have just completed first 15 days, or about to complete the first 15 days, and we can see what impact you made. The number of programs are already lined up, as well as some of the big events has already completed in the last week, as well as the recent week. Capital Market Conclave, GST National Conference, and various programs are lined up. So I request everyone to take active participation and get benefit from these events, and wish you all happy learning. Coming to the speaker for the day, Weber, can I request to present the... Yeah, so Raviji Soni is a chartered accountant, is a BCom graduate from Keshi College. He also completed his MCom from Mumbai University. He accomplished his chartered accountancy course in 2009. Apart from the CA, he is also having multiple other degree. He is also a DISA qualified FAPA, CCA. He is a registered valuer. Also, he has completed CFA level 2. As regard to his work experience, he is a research analyst. He has been research analyst in CRISIL in the year 2010 and 11. And after that, he is operating as a managing partner in RJ Soni Associate, which is having multiple offices, including Mumbai, Delhi, Jaipur, Bangalore, and Pune. Coming to his other activities, he is also a convener of Borivali Central Study Circle in the FY 25-26. He is a founder trustee of Manvatta Charitable Foundation. He is also panel member of Grievance Readdressal Committee of BAC and CADSL. He has been a speaker at number of forums. Welcome, Raviji. I wish everyone happy learning. Thank you, Basan Bhai.
Thank you very much, Rakesh Bhai, for that introduction. And as we all are aware, TDS is the backbone of tax administration in India. Each and every transaction has been captured initially when it has been took place. And with the proposed new Income Tax Act, several provisions relating to TDS are evolving, and it becomes essential for the professional to stay updated with the latest developments, compliance framework, and practical challenges. To guide us through this important subject, we have with us our eminent speaker, CA Ravi Soniji, a highly respected professional and an authority on direct taxation. Sir, we are grateful for your presence and request you to kindly take over the session and enlighten all of us on the topic. Thank you very much, everyone, for joining. Ravi sir, over to you, sir.
Thank you, sir. First of all, I would like to thank Chairman sir, Secretary sir, Treasurer sir, and all the dignitary of WRC for giving me an opportunity. This year, I believe that it would be a very impactful year for WRC and for ICI. So, and also in case of income tax, it is also an impactful year because new Income Tax Act is starting from 1st April 2025. So I will just share my screen. So TDS is a mechanism where the person responsible for making the payment is required to deduct the taxes. So the main objective, if we see, is that we should pay the taxes as and when you are earning it. Second, there should be a regular cash flow to the government. Because if we pay the taxes at the year end, then throughout the year, if the government doesn't receive any income, then it would be difficult for them to run the country. So TDS is in provisions where one type of an advance tax where because of which there is a regular cash flow to the government. Now, with the help of various TDS provisions, the tax base has been widened. It also helps us to plug and detect the leakage of tax revenue. Why I'm saying this? Because if we see all the various new provisions is to capture the data or to capture the source of income. Once the source of income has been captured, then it would be very easy for the government to tax on them. So whenever we see a new provision, its main objective is that to plug and detect the leakage of revenue. TDS provisions help to shift the responsibility. See, generally the responsibility to pay the taxes is of the person who is earning it. But with this TDS provision, it has been shifted from the person who is earning the to the person who is paying that income. Now, because of these TDS provisions, it is very difficult for a person to evade the taxation. So these all are the major objective behind which various new TDS provisions or TCS provisions has been added or amended. Now, in TDS provision, there is a paradigm shift in the tax deduction at source. Why I am saying? Because earlier there were more than 35 plus scattered section in scattered section starting from 194 or 192 to 206. Now they have logically divided all the TDS provisions into three simple sections. First is section 392, which contain the detail of salary and accumulated balances. Section 393, the non-salary TDS, and section 394, tax collection at source. So section 393 contain both detail for TDS on resident and non-resident for non-salary. The key amendment in the TDS is that the rates, if we see earlier, there were very different rates were there, but now it has been shifted that only a few types of rates are only there. So the government have tried to streamline the rates. The government had tried to streamline the threshold limit so that the complexity has been reduced and it is simpler for any person to know that okay, this is the TDS rate. Earlier, for different section, different rate, different threshold, but now it has been streamlined. If we see, there are only hardly 2 or 3 types of rates are there: 2, 10, and 20%. And threshold limit also 10,000, 20,000, and 50,000. That's all limit has been reduced. Section 392. So section 392 is a replica of section 192 in section as per new Income Tax Act. The section 392 contains the detail of salary, the TDS and provisions. The core provision is always is retained. However, there is only slight changes that aggregation of salary when employed job during the changes. Means if the person is changing a job during the year, then the person has the deductor has a right to incorporate both the person's salary. Adjustment of house property losses declared by the employee, inclusion of other income for their compressive TDS calculation. So all this core provision has been retained. So there is no specific per se major changes is there. The only thing or the only additional which has been included that earlier section 192 and 192A was a separate section. Now both has been included under section 392 only. That is 192A is the TDS on balance accumulated on provident fund and all. So if the person withdraws that PF and if it is withdrawn before a specific condition, then TDS is applicable. Earlier it was shown under section 192A. Now it has been merged with section 392 only. 393 is the comprehensive or the master of non-salary TDS provisions. See, earlier there was different sections, small sections were there for small nature of the income. But now they have divided the whole section into 4 different tables, and all the provisions related to non-salary TDS provisions has been incorporated only in one individual section. So the 4 different table includes first table when the payment is made to a resident. If the payment is made to a resident, then all the provisions has been included in table 1. Second, when the payment is paid to a non-resident and TDS is applicable only to a non-resident. Third, when the payment type is applicable to both resident and non-resident. And fourth, the exemption. All the exemptions which were there in different sections now incorporated in table 4. So table 1 contains the payment or the details of all the payment transactions where it is applicable only and only to a resident. If this type of income is paid to a non-resident, then this provision will not be applicable. The table 2 provisions would be applicable. Table 3 contains the details of all the provisions where it is universal. That means the residency status is not important. However, the nature of income is very important. And table 4 contains the exemption details. Now we will go through all the important sections and what is their amendment or what is their major impactful changes. Now, if we compare the interest on security, which were earlier in section 193, now it has been incorporated in section 193, table 1, serial number 5. So, earlier the threshold limit of 10,000 was applicable only to individual NHF. Firms and companies were not there, was not the part. Now, it has been incorporated that all the recipient, the 10,000 threshold would be applicable. So a standardization has been done. Second, there were two different threshold limit was there. That if a security is registered, then the different rate was there 5,000, and then if the security is not registered, then different rate. So everything has been consolidated, and now only one specific threshold limit is there. That is rupees 10,000 rupees only. So 10,000 threshold limit and 10% TDS rate. So threshold limit is applicable to all the recipient. TDS on dividend. See, if it contained in section 393.1, table 1, serial 7, there is no much changes. However, if we see the table 1, table serial number 7, it shows that there is no threshold limit. But in table 4, a specific column has been mentioned that if the dividend is paid to only and only individual, and that also in non-cash payment, then 10,000 rupees would be the threshold limit. So, like earlier, the threshold limit of 10,000 is retained, but this limit is only and only to an individual, not to a non-individual like HUF, firm, AOP, or any person. If they are receiving a dividend, even though of 10 rupees or 1 rupees also, then also 10% TDS has to be deducted. However, there is specific consumption exemption is also provided that LIC, other insurance company, mutual fund. So all this exemption has been provided in section 393, table 4. For dividend, this year the government has come up a new provision that earlier if the person is receiving dividend from 10 different companies, and if they want to submit the form 15G 15H, then they have to submit to 10 different companies. So now to simplify it, the government has come up with an idea with a new provision that instead of submitting it to different companies, they can directly submit to a depository. So in India, there are two depository only, CDSL and NSDL. So the deductee has to submit this form 15G 15H, which is now form 141, to the new income to the depository, that is NSDL and CDSL, and CDSL will provide this detail to the company, and then company will provide the benefit of form 15G and 15H. However, this would be applicable from 1st April 2027, because this is a major change which required a major infrastructure changes. So they have given a 1 year time for NSDL and CDSL to come up with various provisions or various infrastructure from where they can collect this from 15G 15H, and they can share the same with the with the companies. Now, TDS on interest non-security. See, this TDS on interest non-security is defined, or earlier it was section 194A. Now it is section 393, table 1, uh, serial 4. So there it has been defined the provisions of earlier which was there. It has been retained. There is no specific change. The only change, if we, or the only amendment, if we compare with the Income Tax Act 2025 and the amendment Income Tax Bill 26, there's only important change was there, that they have also added the exemption for the cooperative bank. See, this exemption for the cooperative bank was already there under section 194A. However, when they have introduced the Income Tax Act 2025, they have not included this. They missed to include this this exemption. But now, with the new amendment in this new finance bill, they have introduced. Second important change was there, that if a person is receiving an interest from MACT, that is motor accident claim, then it is fully exempted. Earlier, only up to 50,000 it was exempted, but now if the person is receiving an interest of more than 50,000 also, then also it is exempted. The only thing is that the interest calculated from the day the claim was there till the court has given the order, till that period, whatever the interest amount is there, that amount would be exempted. However, any additional interest from the day the court has passed the order till the person has received, that interest would be applicable. In this section, they have also provided clarification, specific clarification, where the CBS condition is mentioned. CBS condition, CBS means a core banking solution. So if any bank or cooperative bank has not adopted CBS, then on a branch-wise basis, this 50,000 and 1 lakh threshold limit would be provided. However, if the bank has already adopted the CBS, then the threshold of 50,000 and 1 lakh would be provided on a company or a bank-wise basis, not a branch-wise basis. So this a specific clarification has been provided, because earlier there was many, see, I would say that from 4 or 5 year backs, all banks were having the branches wise stand number. But now all the branches, all the banks have only single TAN, centralized TAN. So there was many confusion at that time, that the 50,000 or 1 lakh should be provided per branch or on a basis of the bank wise. Now in this, it has been clarified that if the bank has adopted CBS, then consolidate. If the bank has not adopted CBS, then branch wise, branch wise. Winning. So this winning, the provisions are exactly same. The winning has been provided under table 3. The winning, whether the person is resident or non-resident, the same provisions are applicable to both. The threshold limit is 10,000 and TDS rate would be 30%. However, for the online game, the threshold limit, there is no specific threshold limit. The whatever the person is earning at the end of the year, on that the TDS would be applicable. So, meaning there were earlier 3 different sections. Now all has been consolidated in table 3, serial 1, 2, 3. TDS on contractor payment. So TDS on contractor was earlier mentioned in section 194C, but now it has been mentioned under section 393, table 1, serial number 6. So there is no specific change in the threshold limit and rate. However, they have defined that the manpower supply would explicitly would contain under the work definition, and as such, TDS would be deducted as per section, either at a rate of 1% or 2%, depending upon the deductee preference. So depending upon the deductee code. So why there was very confusion on this manpower supply? Because many a time the officers were of the view that if the manpower supply is a professional, then TDS would be deducted as per the professional, and if the manpower supply is a labor contract, then TDS would be deducted under section 194C. So in order to remove this confusion, they have now clarified or defined the manpower in the supply of the manpower within the purview of the work only. See, in old act, all the definitions were either provided in section 2, or they have been provided in the as a proviso or notes to that particular section. But in new income tax act, all the definitions pertaining to that chapter has been defined in that chapter only. For example, for TDS, all the definition has been provided in section 402. So whatever if we want to, for TDS provision, if we want to see any definition, then we have to refer section 402. The 402 explicitly define all the definition. So contract payment, the manpower supply clarification has been provided. Now 1% if the deductee is one individual and HUF, and 2% if the deductee is other than individual and HUF. Commission brokerage. So earlier different section like 194D, G, H was there. So the same has been followed. The same rate has been followed in section 393 only. There is no per se change in the threshold limit, or neither there is any specific amendment pertaining to this three section. So TDS rate is 10% or 2% only. However, for 194 insurance commission, if the deductee is a corporate, then the TDS is 10%. For all other, the TDS is 2% only. Threshold universal 20,000 is the limit. 194J. It is also an important, very important section. Earlier, old section 194J. Now, professional and technical services. So the TDS rate is a pre-change. There is no specific change. The only thing is that for TDS for technical services 2%, TDS for call center 2%, royalty for cinema and film is 2%, royalty for other 10%, and other professional fees 10%, and director remuneration 10%. So per se there is no specific change in the rate or in the threshold limit. However, there is very confusion whether it is a technical service or it is a professional services. So professional services means medical, legal, engineer, and accountancy, where the degree has been used, professional degree has been used to provide that services. Then it would come under FAS, that is fees for professional services. However, if no degree is being used, then FTS, that is fees for technical services. So this is a very slight change and thin of differentiation is there. Now, one important change has been introduced in TDS for professional and technical services. See, in the definition of work, earlier it was specifically mentioned that the advertising is contained under the definition of work, and so the TDS was deducted under section 194C, that is 1% or 2%. Now, in professional services also, they have included the advertising. So what does this mean? There is a conflict of interest where advertising is there in both under professional service also and under work and contract. So wherever the professional like actor or the person is designing and advertising, then it would consider as a professional services and TDS would be deducted at a rate of 10%. However, if the advertise is in the nature of work, that is they are displaying or they are running this advertisement then the TDS would be applicable as a work contract and 1 or 2% would be deducted. So this would be a very litigation part, because the advertisement has been introduced in both professional services and work contract. So in near future, we believe that the government will come up with more clarification that which advertising is considered under professional services and which under advertising is considered under work contract. But in general, whenever an advertising is design or anything is done, which is a professional services, then it would consider under professional services. See, at any point of time, if you have any question, then please let me know at the time only. Life insurance process threshold limit is the same only for like earlier. Up to 1 lakh was exempted. The only thing, the only change in this act or in this wording is that earlier the wording was, if the amount is 1 lakh or 1 lakh and more, then TDS is applicable. Now the TDS will trigger only when the payment exceed 1 lakh. So earlier, if the payment was exact 1 lakh also, then also TDS was applicable. Now TDS will trigger only when the payment exceed 1 lakh rupees. So this is the change which is to maintain the harmony, or which maintain the consistency in the language of all other provisions. So wherever there was provisions were there where one threshold limit is exceeding or on that amount, so now everywhere it has been maintained the same thing, that if the amount exceed the threshold limit, then only the TDS provisions are applicable. One exemption has been provided that if the life insurance proceed has been received by death benefit, then the policy is exempted and it remains outside the TDS scope. So there would not be any TDS provision. National Savings Scheme in the same section, no specific change, 10%. If the amount is here also, the only specific change was that it exceed. Earlier, like equal to was not there. Now it's exceed 2,500. Then these provisions are applicable. Rental income. So in rental income, per se, there is no specific change. But however, from last year, there was an important change was there. Earlier, the rental income threshold was on a yearly basis. That means if the annual threshold limit is crossing rupees 2,50,000, then the TDS provisions were applicable. Now, the threshold limit is on a monthly basis. Monthly basis means that if the threshold is for that particular month is more than 50,000 rupees, then TDS provisions is applicable. Now, over here, one confusion is there that, sir, what would happen if the payment, if the landlord, if the person is making a rental payment on a quarterly basis? For example, the monthly rent is 30,000 rupees, or I will say 40,000 rupees. And on a quarterly basis, he is paying 1,20,000 every quarter. So whether this TDS provision is applicable or not. See, the Act specifically says that a particular month when the income is accrued, and if that income is more than 50,000 rupees, then TDS provisions are applicable. So in this case, the payment is not a trigger point. The trigger point is that where for which month the payment has been made. So for in our given example, though the 40, 40, 40, 3 month, the threshold limit is below 50,000 rupees. As such, the TDS provision is not applicable, even though on a quarterly basis, on a month of July, on a quarterly basis, they are making the payment of 1,20,000, which is more than 50,000 rupees. So the most important thing is that we need to check for every month whether the TDS is crossing 50,000 or not. If it is crossing in 50,000 rupees, then for that particular month only TDS has to be deducted. Second important change is that now the factory premises is also included in the land and building. Earlier, many people were considering that a factory premises it is a part of plant and machinery. As such, TDS was deducted. As such, they were deducting the TDS at a rate of 2%. But now the factory premises is exclusively included in the land and building definition, and as such, TDS would be applicable at a rate of 10% only. Joint develop joint development agreement, the status remains same. There is no specific change. On a TDS would be deducted at a rate of 10% on a month on a whatever monetary consideration they are providing. So no specific change in this section. Mutual fund income threshold limit has been codified by the 10,000 rupees. Digital declaration like dividend over here also digital declaration would be provided through the NSDL or CDSL. Capital gain is specifically exempted for FII because for FII, the capital gain tax is the TDS on capital gain is deducted on a separate provision. Compulsory acquisition, whenever the person is, whenever the government or any person is acquiring a compulsory land, then the TDS would be applicable. Over here, the limit has been raised from 2.5 lakh to 5 lakh rupees. And also the trigger point has been now changed either credit or payment, whichever is earlier. So the exclusion like earlier, agricultural land, because agricultural land is not a capital asset. Second, if the compensation is awarded under section 96 of the right to fair compensation, land acquisition, rehabilitation and resettlement act to 2013, then it is fully exempted. Now all the sections pertaining to 194 LB, LBA, LBB, section 194 LBC, LC, all has been included in section in table 393, table 2, and different. The same rate has been introduced. There is no specific changes in this section. So like there were different sections for if the business trust, the REITs and investment is there, then 5% or 10% on dividend and rent. Resident investment, non 10% for non-resident. So all this has the same TDS provisions has been incorporated. There is no specific changes. Cash withdrawal. This is the major impactful I would say major impactful section for if we compare it to section 190 1961 194N. Why I'm saying this 194N is a major impactful section? Because earlier what is the provision that if the person is a non-filer, that means the person has not filed his income tax return in the last 3 years, then for him the TDS for him the cash withdrawal limit was 20 lakh rupees only. That means if the person has not filed the return for last 3 years, the cash withdrawal limit is 20 lakh rupees only. And if he is withdrawing the cash more than 20 lakh rupees, then TDS was applicable at a rate of 2%. However, if the same person is withdrawing the amount of more than 1 crore rupees, then this is been increased to 5%. So the rate, the non-filing, there was a very burden, and for banking also, it was very difficult for them to check every time that a person is a filer or non-filer and to have a specific rate for them. Now, this non-filer burden has been removed. Now there is specific only one limit, that is 1 crore rupees per financial year threshold limit. If the person is withdrawing more than 1 crore rupees, then TDS is applicable at a 2%, and the TDS of 2% is only on the amount withdrawn above 1 crore rupees. So if the person has withdrawn 1 crore 10 lakh rupees, then the TDS would be applicable only in 10 lakh rupees. Over here, the relaxation is provided to the cooperative society, that if the cooperative society providing sector specific clarity, then the TDS threshold limit would be 3 crore rupees instead of 2 crore rupees, instead of 1 crore rupees. So this is the major impactful section, because in day-to-day wise basis, we have seen that the bank has deducted huge amount of TDS for a non-filer. That means the person, if the person is senior citizen, and if due to some emergency, if he's withdrawing some more than 20 lakh rupees, then the TDS would applicable at a rate of 2%. And if he has withdrawn more than 1 crore, then at a rate of 5%. So that has been removed. So it is a very, very welcome. Individual HUF non-business payment. If the individual and HUF non-business payment is more than 50 lakh rupees, then the TDS would be applicable. Earlier, this section was under section 194M. Now it has been defined in table 1, serial 6 only. So for this transaction, the time requirement is not there. Earlier, the return was 26 QC. Now there is only one specific return, that is return 140. E-commerce platform responsibility. So e-commerce, the TDS is applicable. Earlier, it was applicable under section 194O. Now it is table 1, serial 8. So the provisions maintained is same only. There is no specific change. However, if the virtual digital asset, if the transaction is belong to virtual digital asset, then TDS is not deductible under section 194O. However, it would be deductible under different section. Specified senior citizen income. The section was earlier, the section was 194P. So a specified senior citizen income means if a person who is of age 75 plus, and if he has only two types of income, that means if he has the pension income and FD interest from that particular bank only. So both are from same bank. Then the person is not required to file its income tax return. The senior citizen is not required to file its income tax return, and the bank is required to deduct the TDS on a has to deduct the TDS as per the average income tax rate. What do you mean by average income tax rate? The average income tax rate is similar to section 392, that is for salary. How we are calculating the TDS rate? Same way over here also we will calculate the TDS rate. So the person's pension income will be added, interest income would be added, and then whatever the total income he is receiving, on that total income, TDS total tax will be calculated. This tax would be divided by 12 months, and a total monthly TDS would be calculated, and this would be or deducted. So specified senior citizen is a very, very welcome. If the person's TDS has been deducted under section 194P, that is for under this provisions or this section, then the deductee is not required to file its income tax return also. So he's free to file his income tax return. TDS on purchase of goods. So TDS on purchase of goods, if the person is purchasing a goods and it is more than 50 lakh rupees, then the TDS would be at a rate of 0.1% on a sum exceeding rupees 50 lakh only. So the threshold limit is 50 lakh is per financial year. There is no specific change. And the buyer liability is to check that if the buyer is only applicable, or this provision is only applicable if its turnover in the previous financial year is more than 10 crore or no. So if a person is starting a new business in the same year, then this provision is not applicable, because in the previous financial year the 10 crore limit was not there. So this is very crucial to check that whether section 194Q or provision of section 393(1) is applicable or not. We have to check the turnover of our previous return. Over here, one more relaxation is given that if the deductee doesn't have the PAN, then the TDS would be at a rate of 5%. Earlier, it was 20%. TDS on benefit or perquisite, the concept remains same. 194 earlier, the section was 194R. Now everything is same. The TDS rate would be 10%. Threshold limit is 20%, and the nature, that is benefit, perquisite, cash, has been identical only. So the per se there is no specific changes. TDS on virtual digital asset or VDA. So, like I told that for e-commerce, if the product is VDA, then TDS is not deducted for e-commerce section provisions, but the TDS would be applicable over in this provisions. That is table 1, serial number 8. Same provisions, the TDS rate would be 1%. 50,000 per financially, the threshold limit for small person is 50,000 per person. The threshold limit, what do you mean by small person? If the person receiving is the individual HUF, then the threshold limit is the 50,000 rupees. If the person is other than that, then the threshold limit is 10,000 rupees only. So whenever there is a provision, a conflict of section is there, that 194O or 194S, then 194S TDS would be deducted. So anyway, the act, there is a rule that if a specific provisions or a general provision is there, then the provisions of specific would be applicable. The same way, the provisions of section 194S would be applicable over and above 194O. Remuneration to the partner. Section name was 194T. So if the firm is paying any remuneration, any interest, or any commission, or any other bonus, then the TDS would be applicable if the monthly or if the yearly amount is more than 20,000 rupees. So now if the firm is paying to its partner any salary or remuneration or commission or bonus or interest, then TDS would be applicable. See, this TDS provision is not applicable on share of profit or when a person is withdrawing the amount. If the person is withdrawing withdrawing from its capital, then this provision is not applicable. However, if the person is withdrawing the salary, then since the firm is paying salary, then TDS provision would be applicable. Non-resident TDS from multiple section 196A, 196B, 196C, and 196D. So all these are various provisions per se, which there is no specific changes. The only important thing is that wherever there is a beneficial DTAA rate is there, then that beneficial DTAA rate would be applicable. So section 190, earlier section 195 was there. Now specific rates has been defined for specific nature of the income. In section 195, one unique or one welcome amendment is there, that if the person is purchasing a property from a non-resident, then earlier the person is required to take a TAN number because he has to deduct the TDS under section 195. However, now, or I will not say now, from 1st October 2026, if the person is purchasing property from a non-resident, then he is no longer required to take a TAN number. He can file a PAN-based return like 26QB. 26QB was only there when the deductee was resident. But from 1st October 2026, this is also provided to a non-resident also. So now if the person, or not now, from 1st October 2026, if the person is buying the property from non-resident also, then also he is not required to take a TAN number, and the TDS return would be 26, would be or similar to 26 QB. So general non-resident. So historical, earlier the burden was that the person has to take the TAN number, but from 1st October, TAN number is not required. PAN-based return has can be filed. No deduction scenario. So for no deduction scenario, it has been provided under section 393, table 4. So in no section also, we have divided it in 4 different parts. First, it is small taxpayer exemption, financial sector relief, business and contractor payment, and nil TDS self-declaration. So like for small taxpayer, the dividend income, if less than 10,000 rupees, the exemption has been provided. If the payment is paid to a contractor for a personal use, and if the amount is less than 50 lakh rupees, then TDS is not required to be deducted. For e-commerce, if the income is, if the gross sale is less than 5 lakh rupees, then also TDS is not required to be deducted. And for VDA, the limit has been increased from 10,000 to 50,000 rupees. So all this specific exemption for small relief has been provided under table 4. Now, second exemption has been provided, which we can divide in financial sector benefit, like interest to National Development Bank, or interest is paid to a UTI, interest dividend is paid to LIC, UTI, or interest is paid to cooperative bank or bank. So all this exemption has been defined in table 4. Third important exemption has been are there, like transporter, business trust. If the business trust REITs and InvITs are taking receiving the rent payment, then TDS is not required to be deducted. Capital gain, uh, compulsory acquisition under section 96 or RFCTLAR Act, cash withdrawal for white label, post office, bank. So all this specific exemption has been provided, which is related to business or infrastructure. Now the cash TCS. So TCS, if we see that now the all the provisions or all the rate has been harmonized. Now there is a specific only one rate is there, that is 2%. Earlier 1%, 2%, 5%, 10%, 20%, different rates were there. But now only one specific rate, 2%. So the 2% rationalized rate has been defined for alcohol, scrap, mineral, for tendu leaves, everything, everywhere where it was either 1%, it has been increased to 2%. Where it was earlier 5%, it has been decreased to 2%. Only for motor car applicable, the rate remained at a rate of 1% only. TCS on foreign remittance. So the TCS on foreign remittance, there is a great relief, because earlier it was that up to 10 lakh rupees, the TCS rate was 5%. Above 10 lakh rupees, the TCS was 20%. So which was very high. But now it is flat 2%. Same way for LRS. If it was more than LRS pertaining to education and medical, if it is more than 10 lakh rupees, then the TCS rate was 5%, but now it has been reduced to 2%. Now LRS other purpose. The government don't want LRS for other purpose. So the TCS rate, if the LRS for other purpose is more than 10 lakh rupees, then the TCS rate remains 20% only. Compliance update. So earlier period timing was there, that in some cases it was at the time of receipt, in some cases it was at the time of credit. So either receipt or credit, whichever is earlier. But now in new act it has been unified. So the unified timing is there, that either debiting the account or receipt, whichever is earlier, for all type of TCS transaction. So the rate rationalization, 1% For alcohol, the rate has been increased to 2%. Scrap rate has been increased to 2%. For tendu leaf, it has been decreased. For timber and forest produce, it has been decreased. For motor vehicle, it has been remained the same thing. Section 395, lower deduction certification. This year, in the budget, the minister has specifically mentioned that they will come up with the lower deduction certificate automation. Automation means up to certain limit, if the person is applying for lower deduction, then a rule-based automated verification would be there. That means there is no specific or no manual intervention. The manual intervention would only there if it crosses a particular limit. So up to certain limit, if the person is applying for low LDC, then if the person has submitted all the document and if it's certified or it is fulfill all the rules, then automatically the TDS LDC certificate would be issued in a day or two. So because of this, now the manual intervention would be reduced and the issuance of lower deduction certificate process would speed up. Tax credit mechanism. Tax deducted and collected is deemed to be income. Deducted and collected treated as an advance tax on behalf of taxpayer, and credit given to taxpayer when the income is accessible. So if the income is not accessible in that particular year, then the credit would be transferred to next year. So this is the fundamental framework or fundamental principle of TDS and TCS. 397 requires the 10 number for any TDS return. However, the specific exemption is there for property purchased from non-resident or where property sale of immovable property or rental paid by individual and HF who doesn't have the business. So for specific exemption, rest all cases wherever the TDS provisions are there, the person is required to take a 10 number. This is the major and important change from which would be applicable from 1st April to 2025. See, till last year, there was no specific time limit to file the correction of TDS return. From 1st April 2025, they have given a timeline that till 6th year, you can file the revised return. But from 1st April 2026 onwards, this will again reduce to 2 years only. So this is a major change, a significant change, because from 6 years, they are reducing it only to 2 years only. So till 31st March 2026, you have time to file a correction return for financial year 1920 to financial 23-24. After April 26, this the TDS default or TDS correction you cannot file any TDS correction for financial year 1920 to financial year 23-24. This I will say a very welcome also, because once the return has been filed by a deductee and if the deductor revises afterward, then it becomes very difficult for the deductee to change or to ask for a refund or to fight for it. So now after 2 years, if the since the correction would stop, so the person would not file the revised return and they will not be deductor will not be able to rectify remove the pan or to rectify it. However, if there is any genuine cases, then you have to go to the AO and then AO can do the changes. Section 398 pertaining to this 6 years. So from 1st April 25, we know that the TDS return correction time limit is 6 years only. So if in your client case, if you have any this default pertaining to 7, 8 till 18, 9, then the department had introduced a new, I will say, a new provision or a new procedure, which is a demand management procedure. So any demand pertaining from 7-8 till 18-19, you can use the demand management system, which is there on Traces portal, and with the help of this, you can reduce your demand. Under this demand management system, you have only right to tag a challan with the specific demand. So if there is any demand is there, then you can tag the challan to that demand. However, the credit of that would not go, or you are not allowed to revise the return. If there is a specific correction is there that or the default is due to pan error, then you are not allowed to do that changes. The demand management system is only to manage your demand, whatever your demand is there, and if you have already paid the demand, that demand can be managed or can be removed through demand management system. Section 398, consequence of deduction failure. So if the person is not deducted the TDS, which is required to deduct, then he would be considered an assessor in default. Interest liability, it is the same thing. If the person is deducted the TDS and not deposited, then TDS interest would be applicable at a rate of 1.5%. If the person has not deducted the TDS, then the interest for non-deduction, that interest would be applicable at a rate of 1%. Centralized processing system. Now, from 1st April, they are coming up with Traces TDS 2.0 or Traces 2.0, where they are coming with the API form API mechanism, where through API you can upload the return. Section 400 provide the flexibility and power to the CBDT to issue a guideline or to remove any difficulty, implication difficulty, or any interpretation clarity. 401 protect the payee. 402 is the specific provisions where all the definition which is pertaining to these TDS provisions, TDS sections or TDS chapter has been incorporated in this TDS provision in this section. So the major important amendment in the definition is first the work and manpower supply. Second, the rent definition, they have included the factory building. Third, senior citizen, authorized person and key definition, commission. So all the provisions, all this which has been, which is have an impact on the TDS provision has been defined under section 402. So 402 is a Bible for the definition. Timeline, 1st April, the TDS on partner is applicable. 1st April 2026, New Income Tax Act would be applicable. 1st October 2026, non-resident 10 number will be applicable. And from 1st April 2027, centralized form 15G 15H would be applicable. This is a rate comparison. Salary average slab rate, security 10%. So it is a basic, the same rate. There is no specific change in the rate, except in TCS, there are major changes are there. So administrative wise, the department is going through digital transformation. They are introducing automated LDC issuance. They are introducing centralized declaration filing, and they are enhancing the CPC processing by introducing TDS 2.0. Litigation resolution, they are trying to reduce the litigation by defining manpower or property aggregation or factory rental. However, there is ambiguity is there on the advertisement classification and transaction categorization wherever there is any hybrid services has been provided. Sector specific impact analysis for staffing industry, it is very positive impact. For travel and tourism also, it is a very positive impact because the TCS rate has been reduced from 20 to 2%. For scrap, we will say that is a negative because the TCS rate has been increased from 1 to 2%. For real estate, mixed because at one place the TDS rate, the threshold limit has been increased. However, the acquisition has been reduced. ESOP, there is no such impact. It is a neutral. And senior citizen, neutral or positive. Because why I will say positive? Because the threshold limit for insurance, the mutual fund has been increased. Cross-border consideration, DTAA benefit would be provided. To provide a DTAA benefit, certificate of resident TRC is to be provided along with all other document. Now, before going to other sections or the new income tax rule or the new income tax form applicable to TS, I will take on all the questions which is there.
Sir, I think we can close the presentation first. Then at the end, we will take the questions.
Sir, after this till now it is the TDS provisions. Provisions are there. Now I will start with the all the forms related to TDS which is applicable from which is provided in draft rule. So this is two separate is there, provisions and forms rules. So because of which I would we can take first all the questions related to provisions and then we can go to forms, if you permit.
Sure.
Okay, we will take the questions at the end. Income tax has introduced the draft income tax rule 2026. Earlier, there were more than 399 old forms. Now only 190 forms. Earlier, there was 511 old rules. Now only 333 rules. So if we see the major reductions in the form, it is because they have consolidated various returns or various types of similar forms in one single form only. So employee declaration, old it was 12B, now form number 122. The provisions or particulars are exactly same. The only thing is that the detail they are asking is more comprehensive and more systematic way. Declaration for nil and over deduction certificate. Earlier, form 15G and form 15H was a separate form where if the person is senior citizen, then he has to submit the 15G, 15H, and if the person is non-senior citizen, then 15G has to be submitted. But it has been consolidated and now only one form, that is form 121, is applicable. Same way for 15C and for 15D, it has been consolidated in form number 126. Certificate of TDS on salary, form 16, it is form number 130 only. However, the form 16B, 16C, 16D, and 16E, it has been consolidated to only form 132. So, see, form 16B, 16C, 16D, 16E is a certificate of TDS for specific transaction, like 16B is for sale of purchase of immovable property, 16C is for rent, 16D is for virtual asset, and 16E is for professional more than 50 lakh rupees. So all this has been consolidated in form 132 only. Form number 133, form which is a certificate for tax collected at source. There is no specific change in the TDS forms, TDS return. The only number has been changed. The one important change, if we are comparing the forms, then like there is a change in the challan sheet, the challan detail. If we see the challan details in form 138 or 141 and 144. In the challan detail, earlier we used to provide the full detail like total basic amount, surcharge, education cess, interest, everything has to be provided. But now it is asking a total amount only. Total amount, interest allocation amount, and fees amount. Fees under section 234E. So only this C amount has to be mentioned. No specific bifurcation is required to be mentioned in the TDS return also. They have consolidated all the pen-based return into one specific return, like 26 QB, QC, QD, QE. Different 4 types of return was there, but now only 141. So at the time of filing of the return, just select the nature of the nature. That is, the nature is for sale of immovable property or rent, and then we have to mention the new details. One more important change they have introduced in this form is that earlier for each deductee you have to file a separate 26 QB. Like if there were 2 buyer and 2 seller, then 4 form 26 QB is required to be filed. But now only one for one particular deductee. So if there are 10 seller also 10 seller, then one buyer is required to file only one form, not 10 26 QB. So this is a very welcome, because now many a time there are major multiple buyers or multiple sellers are there. So since there are multiple sellers, so there is a huge number of forms the person is required to file, but now only one specific form. 27 EQ, it is 144, 143, and 27Q, it is 144. Foreign remittance, Form 15 CA, Form number 145, Form 15 CB, Form number 146. Like earlier also, Form 15 CA, there would be 4 different parts. Same way in Form 145, there would be 4 different parts. 26A, where the charter accountant certified that the payee has already paid the taxes. In now it is form number 149. Same way, 27BA, similar certificate, TCS, the form is 150. So 122. TDS certificate, I've already shown that all the TDS certificate which is required to be issued under various section. Now it is only 132. 132 is required. Same way 133 annual certificate, 138 quarterly statement for TDS on salary and senior citizen. I'm just rushing through it because there is no specific changes. Only the form number has been changed. Wherever there is a changes, I've already highlighted. The only thing is they have clubbed the different forms into one form, and they have removed all the unnecessary details which we were filing it earlier, which was required to be mentioned earlier. Now they have removed, like mentioning the surcharge, education cess, since surcharge and education cess is not applicable only, or wherever applicable, there also if you mention the total amount, then also the benefit is been provided. So no specific surcharge or education cess detail is required to maintain. The only total amount has been maintained, and you can provide the benefit. No change on the due date of the payment, no change on the due date of issuing of the certificate, no change on the due date of the filing of the TDS return or TCS return, or all the returns which has been required under for TDS and TCS. Quarterly statement, everything is required to submit on quarterly statement only. Yeah. One important change they are coming up from next financial year is that TCS 2.0 or TDS 2.0. So in this TDS 2.0, they are coming up with an API type of functionality where the deductor would be provided an additional facility to upload the TDS or TCS data on a monthly basis or daily basis, fortnightly, as and when the company or director wishes to upload it, they can upload it. So once the data has been uploaded, it will be shown as a provisional uploaded provision provisional, and after submitting the quarterly return, it will show as the finalized one. So once the deductor upload the data, the deductee can view it in its AIS or 26 AS, and they can check whether the TDS has been reflected or not. However, the status of that entry would be a provisional one. So this is the new change which they are coming up. Initially, this they would be applicable only to a big deductor like bank, insurance companies, or any other companies where the nature of income or where the transactions are more. Later on, this facility would be provided to a small deductor also. So wherever the bank or this deductor are deducting the TDS, so they will have a right to upload it on a daily, monthly, fortnightly, weekly, or a monthly basis. They can upload it. After uploading it, they can also pre-process it. Pre-process means they can check whether any default is going to come or not. So if there is a default at that time only, it would be highlighted, and they can pay this additional default without any additional interest, because if they are making it before that payment, before the date of depositing an amount. So API based transaction would be applicable from April only to a big deductor. Then in coming forth, they are coming. This would introduce to the small deductor also. Second, they are coming up filing of TDS return on traces file itself only. Currently, we are uploading the TDS return on e-filing portal, and from e-filing portal, the TDS return is being transferred to traces portal. So in 2.0, TDS 2.0, it would have the functionalities to upload the TDS return on TDS traces portal only. Fourth, they are coming up with an API access where, like GST, GSPN, they have allocated GSPN. Same way, they will allocate TSPN where the API would upload the TDS return on quarterly basis also. Same way in GST, just now we are filing e-invoices, and this e-invoices is reflected in our GSPN on a daily basis. Same way over here, whatever the TDS has been deducted, if the deductor wish, he can upload it on daily, quarterly, fortnightly basis. It can be uploaded. However, the return would be filed on a quarterly basis only. There is no change in the quarterly due dates of the return, or no change in the monthly or quarterly timing. So whatever return is applicable on a monthly basis, that would be applicable on monthly basis only. Whatever is applicable on a quarterly, that would be applicable on quarterly basis only. Even there is no specific change in the TDS deposition date also. Form 144, which is 27 EQ for 27Q. 145, 15 CACB, 4 parts. Quarterly statement. I will just go through the rules. So Rule 205 requires the employee to furnish a declaration or evidence to claim any deduction. Rule 207, exchange rate for TDS on foreign currency, specified that the TDS would be an exchange rate would be either on the exact date of the transaction. Rule 203, credit for tax credit. See, earlier it was the scenario wherever the TDS has been deducted or accessible in other than immediate deductee, then this rule is applicable. Earlier, it was Rule 37BA, where the TDS or TDS credit can be provided from the deductee to the actual beneficiary owner. So this has been specified under section Rule 203, Rule 178 applicable for the credit of tax TDS. If you want to, if the TDS has been deducted earlier and the income is chargeable next year, then Form 71 you can file it. Same way, the same rule is applicable, but now the form number would be 102 instead of form number 171. 213 application for lower and lower or no TCS, proportionate TDS on non-resident income, issuance of TCS certificate. The due date, that is due on 15th of next of quarter end, is the same only. There is no specific change in the due date. Form 121, self declaration for no TDS. It is the form earlier it was Form 15G, 15S. Now it is Form 121. Okay. All these rules in the draft rules, there is no specific changes. However, the changes are only in the procedural part and only in the sections part. But in the draft rule, there is no specific changes pertaining to TDS and all. So now we can go through the questions. What happened between 1st April to 31st March 2027 in case of Form 15G, 15H? So Form 15G, 15H from 1st April, it would be the new form. It would be Form 121, and it has to be submitted to separate company, to that particular company only, not to NSDL and CDSL. Only after 1st April 2027, it has to be submitted to NSDL and CDSL. What about year-end provisions as on 31st March 2026, on which tax will be applicable as per old law and their subsequent. See, the new law, I will just make it clear, the new law is applicable from 1st April 2026. The old law is applicable till 31st March 2026. So all the provisions, all the transactions pertaining to 31st March 2026, the old form, old rule, old act would be applicable. Only the provisions or only the transaction which falls after April or after March, that is from 1st April 2026, the new law would be applicable. And in the new law also, there is no specific change in the rate. Only thing is that the section would not be there. See, in the draft income tax form for TDS, that is section 1, that is form 140, they have given us, instead of section number, they have provided the code number. That is a 4-digit code would be provided for a specific list of 50 to 60 transactions has been provided, in which the code has been provided. So in the TDS return, which is for first quarter 26-27 onwards, this code would be applicable. Till 31st March TDS return, the old provisions, old act would be applicable. Since the transaction pertaining to new act, new or old, there would not be any changes. Yes, from 1st April, if you're making the payment for the challans pertaining to 26-27, that is if you're making the challan payment for pertaining to April, then there would not be any section number. They would only be a section, a specific new challan is being provided to them where section number is not asked. So manpower now even include professional. Yes, if the company is providing the professional also, then also it would be included in manpower only. How to incorporate this change in SAP? In SAP, I'm not known about the software in SAP, but this in the SAP or any other software, the software will come up the new version once after the form has been finalized. Unless until the form has been not finalized, they may not come up with the new provisions or with the new this. Once the form has been finalized, then only the new forms or new update for the SAP or other software would be provided. Because till now the rules are in draft format, the forms are in draft format, the provision code mentioned in the rules or mentioned in the forms are in draft format. So the software will come up with the new provisions or new form only after the rule has been finalized by them. If we have excess TDS deducted earlier in, say, in section 194C, set off with the following month, can this be done on new act also? See, if the TDS in new act, there is no specific section number only. So in the challan also, there would not be any section number. So if you have paid any provision, any amount for 194 or for contractor, then the same can be utilized for 194, or I would say for interest payment also, for dividend payment also. So we have to do in a serial number wise basis, and serial number is provided in the draft form. I will just show the form also, so that it would be more clarified. It would be more clarified. It will also affect TDS return filing in both cases. In return filing for 34 for fourth quarter, there would not be any change. It would not affect. However, for return filing for first quarter onwards, there would be change because the section number would not be there. There would be a serial code number. To the due date for deposit of TDS and filing of TDS returns remain the same. Yes, the due date for TDS filing and TDS return would be same only. There is no specific, there is no change they have provided. Is the section code of various TDS payment are been notified? Section code has not been notified till now. They are in a draft form only. So also the TDS return form are all in draft form. So once they have been notified, then only you have to do the changes in your ERP and all. I guess ERP will not impact in general, as it depends on how we book the TDS liability in book. If it is TDS type is 194C, J, I, etc., then this need to be renamed to a new section and to be booked in one GL. Yes, very true. As per se, in ERP or SAP, there would not be much major changes because the section, the concept is the same. Only the naming has been changed. The concept is same. That is 194C TDS is 2%. 2% is only there. But instead of 194C, it would be 1060. For 194I, it would be 1059. Something like that. So only the name of the section has been changed. Rest everything remains same. If firm is not under audit, then this TDS provision is applicable. Whether the firm is under audit or no, it is not a question. The firm TDS provision are applicable even if the firm is having no income or if the firm is having 1 rupee of income also. So the firm, there is no specific exemption. Can you please cover the revised equivalent section 194IA under new act? Section 194IA is covered for immovable property. I have already provided in my PPT presentation. Any change in the traces? The changes in the traces would appear. The traces is also undergoing new changes and its new name is TDS 2.0. So there would be API which I've already mentioned. The API format would be applicable where the deductor would be given a right to upload the data on a daily, quarterly, monthly basis. And then submission would be done on a quarterly basis only. higher TDS rate in case of inoperative PAN is applicable. So if the PAN is inoperative, the TDS would be deducted at a high rate as if it was earlier, same as earlier. What about TDS correction like interest 2011 wrongly calculated by CPC for which there is no provision in correction statement? How can be rectified? Till now, there is no specific provisions to correct the interest which is calculated under section 201. So if you have, then the only way is to file an appeal with the tribunal CIT, and then you can do the correction. Form 13 processing change are applied, which is going to file this month, that is March 26 for financial year 26-27. It would be applicable from April, not from March 26, because it will take some time for department to automate this system. What will the case if there are multiple buyer in case of Form 26 QB? So for multiple buyer, there would be a different QB because it is a pen based return. So if the pen for one pen, there would be one return. However, if there are multiple seller, then only one return would be there. TCS return filing date change effective from 1st April 2026. There is no specific return filing date change. What are the due dates for TDS and TCS payment and return filing? The TDS and TCS return filing due date are same only for TDS payment. If the for TDS from April to Feb, the due date is 7th of next month. However, for the month of March, it is 30th of April. For TCS, it is same for 7th of next month. PPT. Please email here. Will this
Please note
PWR
everyone, PPT and the recording will be uploaded on the website of WIRC. Kindly visit WIRC website. I think there are many questions related to the PPT.
PPT only, yes.
With due permission from the faculty, we will upload the PPT on the WIRC website.
So I will be sharing a consolidated PPT where the draft rule and the Income Tax Act would be included. For application of lower TDS for financial 26, which form to be filed? Is there any time limit? See, the form for application for 26-27, it would be new form, which is equivalent to form 13 only. The time limit is that you have to file before the transaction. If we have an old unused challan, can we use old challan for new section as per New Income Tax Act 2025? Currently, there is there is no clear provisions or no clarity has been provided by the department whether you can use that challan. Yes, earlier there was this facility was there where the challan of one financial year can be utilized in +1 and -1, but till now it has not been clarified. However, we have raised a question with the department and they will be come up with the solution nearby. As soon as I receive this clarification, I will share the same in my PPT also. What if rent for 2 months totaling rupees 60,000 per month paid without paid? Would TDS would be applicable? I have already explained that the TDS is applicable on a monthly basis, not on a payment basis. If you're making the payment of quarterly also, but the TDS for that particular month is less than 50,000, then this TDS provision is not applicable. What are the provision in case the deductor has not furnished the pen? So if the deductor has not furnished the pen, then the TDS would be at a higher rate, and the higher rate would be 20% based on the 20%, and for 194P, it is 5%. What is threshold limit for LDC to get automatically? Till now, it has not been clarified or the amount has not been specifically mentioned. They have just mentioned that up to certain limit, which they will be finalized in this Finance Act. So once it has been finalized, then only I can share you. What will be the case if we can take the credit of earlier TDS payment, excess TDS payment made under old section? I want to take credit as per new section of Income Tax Act. Till now, like I mentioned earlier, there is dilemma is there that whether we can use the old section in new return or not. According to my experience, you can use the old section because in the old section also the section number was of no use. The only thing was required when we do the matching of the challan, it was required to check TAN number, amount, financial year, and or this SIN number. So all these four things would remain same in the new challan also. So section number is there or not, it doesn't make any hindrance or it doesn't make any changes. So according to my view, the old challan will continue to use in next financial year also in new income tax act also. But however, this clarification is not been provided by any by department. We can wait till the clarification is been provided by the department. But as per my view, as per my experience, it would be applicable. You can use this old challan for time bar demand, that is for demand 12 13 12 18, and is there any way correction return can be for demand pertaining prior to 18 19? There is no correction method or there is no any other way to file a correction statement. However, the department has come up with the demand management system in which you can tag the demand with the challan which is already been paid, or you can take the challan or you can make the challan payment and then tag with your demand. For time bar demand 12 13, there it has been clear. Excess payment paid till 31st 2026 will be allowed. Yes, as per my view, it would be allowed, but clarification has not been provided by the department. What will be TCS rate for scrap for inoperative pen? It would be 5, according to me, it would be 5%, but then also I will just check and reply. Excluding GST is the tax only, so there is no cascading effect. On all the transaction, the GST would not be applicable. The TDS would be applicable excluding the GST amount. Whether limit 50,000 is excluding GST, not including GST. Tax paid is to be tagged in which portal for old demand? The traces portal only on tdscpc.gov.in. They have come up with the new tab which is in the name of demand management. So in the demand management, you can file, you can tag your demand, demand with the challan, and once it has been tagged, it will take 3 to 4 days to process it, and after processing, either it will remove all your demand or a new demand may generate if the date is made, if the challan payment is made, if you're delayed in making the challan payment. I will just open the old form of new form. See, this is the section code from starting from 1004 till they have given till 1067. So in new return, you have to mention this section. Currently, this is a draft form. So this is the basic section code which they have provided, starting from 1004 till 1060. So approximately 58 to 60 section code they have provided. And if we see the challan detail also, the major change is in this only. Total tax deducted, total interest, and total fees. Rest all has been removed. Earlier, whatever interest, surcharge, cess, everything has been removed. Now only total tax deducted is important. And in deductive sheet, there is no any specific changes. They have, it is the same thing Challan number, PAN number, name of the deductee, section or reference code, date, amount paid, cash withdrawal if it is more than 1 crore, cash withdrawal it is more than 3 crore, total tax deposited, date of deduction, lower deduction, certificate issue, certificate number, and unique. If the person has submitted 15G59, then unique number or UIN number you have to mention over here. So per se, the form is the same only. Only thing is that in the column 15, instead of section number, you have to mention the code number, which is the column E. Rest all have been the same thing. Okay. I hope I've cleared all the questions. In case any other questions are there, we have more 5 to 10 minutes we can take. Currently, there is no specific new challan format has been provided to us. Yes, they have come up with the, they have provided to the banks. So the bank in the new format, section number is not there. Provision which are going to be in place of new. I've already shared, it is mentioned in the form number, but since these are draft form, so you can, I would suggest just wait till the form has been notified. Once the form has been notified, then you can make the changes in your SAP or ERP if wherever it is applicable. Is there any provision from the department to waive TDS demand of earlier year due to some extent? No relaxation has been provided. There is no specific waiver has been provided by the department to any demand pertaining to earlier years. Is TDS applicable on grant received from charitable trust or registered non-profit organization? See, the grant received towards charitable trust doesn't form a part of or doesn't come under any of the nature of the income. So as per my view, the TDS would not be applicable. However, if the grant has been provided for specific work, that means we have seen that some organization they give that to make a school. So they are providing this to a contractor. They are making the payment for building up the school. So when they are making the payment to a contractor, at that time TDS would be applicable. If the grant is directly provided to a charitable trust, that TDS provision would not be applicable. This I will check. Any clarification toward TDS applicable on interest paid to credit cooperative society by cooperative? So any see TDS applicable to interest paid by credit to credit cooperative society. A specific relaxation has been provided if the if the interest is paid to credit cooperative society by a cooperative bank. As such, TDS would not be applicable. So demand management system tab has been provided on a traces portal. To have the access of demand management tab, you have to log in on your traces portal as a deductor. Once you log in on a traces portal, in the statement they have given one tab which is known as demand management system or demand management. So through demand management tab, you can use this demand management tab to reduce or to tag your demand with the challan which is already you have paid. If there is no challan, then if you are making the challan, then you can use the tab. First make the challan and then use it. In case of school, in years prior to 1819, TDS was deducted by Education Board and school did not have TDS challan. In such cases, traces is showing outstanding demand. Since there is challan mismatch, how can this be corrected? See, in case of the in schools, and we have seen that the department, the education system or education board is required to submit a AIN, and the school is required to submit a TDS return through the stating that the TDS challan has been paid by a book entry. But in this case, in this school cases, we have observed that the school has filed the TDS return stating, or either they have filed the paper return or they have filed the TDS return stating that the challan is paid through a non-book entry, because of which this demand has been generated. Currently, there is no such procedure to correct these types of mismatch. However, if you file an appeal, or if you I would suggest an appeal to the CIT, you may get some relaxation. But till now, there is no such procedural part where you can take the benefit of it, because the school has filed the TDS return. According to me, there is some incorrect, or there is some correction was required to be made in the school's TDS return, and they had time till 24/25. Now there is nothing. They have to pay the challan or they have to file an appeal. There are some questions in Q&A also. TDS is lease rent paid to non-resident query. See, a lease rent paid to a non-resident, for a non-resident, there would not be any specific threshold limit, because it would covered under section the 393 table 2, where the payment is and it would come under uh, uh, residual income. So in this, there would not be any specific threshold limit. If a lease rent is paid even 10,000 rupees or 1,000 rupees also, then also TDS would be deducted at a rate of 33%. 30 plus cess. So basic rate would be 30% plus cess. Payment to non-resident query, 15 CA threshold limit, 15 CB threshold limit. See, 15 CA, there is now 4 parts are there. Currently 144, 145. The 4 part is part A, where if the payment is below 5 lakh rupees and TDS is applicable. Part B, where the payment TDS is applicable and the LDC has been issued by any officers. Part C is where the TDS is applicable and the amount paid is more than 5 lakh rupees. And part D, where the TDS provisions are not applicable. So for part C, where the amount is more than 5 lakh rupees, TDS is applicable. In that case, a 15 CB is also required. What about TDS collection like interest 201 wrongly calculated by CPC? In general cases, if there is a specific interest calculation error, then you can file a request or you can file an appeal to the CIT, because procedurally there is no such option of correction. However, we have seen that generally the interest calculation is there is no such error. There is the only error is that the department is charging the interest from the day the interest is applicable. The TDS is required to be deducted till the day the TDS is deducted. So if the delay is for 1 day also, then the interest is charged for 2 months. How 2 months? As per the provision, the interest is chargeable from the day the TDS is applicable and till the day the TDS is been deposited. And it also been mentioned that even a part of month would be considered it as a full month. So in this case, if the TDS is applicable in the month of Feb, that is the TDS was deducted in the month of Feb on 15th Feb, and TDS was deposited on 9th March or 8th March. Then for Feb, 13 days are there, and for March, 9 days are there. So for Feb, half month is considered as a full month. For March, 9 days will also be considered as a full month, and as such, the TDS would be applicable for 2 complete months. So this is the point we have to be bear in the mind, that wherever there is a payment is a delay is there, then the TDS is to be paid. Even 1 day TDS delay What if length of 2 months totaling 60 days has already been cleared? What is the threshold limit for LTC? This has not been notified till now by the government. Provision in case the deductee has not furnished the PAN number. So if the PAN is not there, then similar to section 206 AA, TDS would be applicable at a higher rate. So I hope all the questions has been answered.
Yes, sir. Yes, sir.
Now, if any, we have 5 to 10 minutes more. So if anyone have any more question, they are free to ask. This PPT, I will be sharing it to the WRC, and they will share it to all the participants.
Registered participants. Yes.
Yeah.
Friends, as I have already communicated, we are uploading the PPT and also sharing with registered participants. It is very exclusively prepared, considering all the presentation of schedules, and very useful for members. Sir, I just propose a vote of thanks on behalf of WRC. On behalf of WRC and all the participants, I propose heartfelt thanks to our today's faculty, CA Ravi J. Somani sir, for your all efforts, valuable time, and excellent presentation, which is very much useful. From 1st of April 2026, all members are eager to listen for this session. Many members have asked us to organize this program, sir, and we have received a very good response in short period of time, considering the importance of the topic. And you have the coverage you have given is very good. You have covered all the aspects of TDS. Thanks to all your efforts and valuable time, sir. I also thanks on behalf of WRC to our chairman Saurabh Ajmera sir, secretary and the MOC of the day, sir Bishan Shah, treasurer uh, Rakesh Shah, also in absentia our vice chairman Rikin Patel, all coordinator of this program, directly indirectly, who has supported to this program, and most importantly all the participants who have actively participated and really gained the knowledge today. I also heartfelt thanks to everyone. With this I declare this program has been concluded. And once again, I declare that you will get PPT and recording on the WRC website. Thank you, friends. Thanks a lot. Thank you, Ravi sir. And we will
Thank you,
troubling
everyone.
you
Thank you,
like
everyone.
this in future. Yes, sir.
Yes, sir. Definitely, sir. Thank you, WRC. Thank you, the chairman, sir. And thank you, everyone, for patiently listening and raising all the questions. Thank
It
you,
was an
everyone.
excellent session, really excellent session, and very useful as considering the time is.